bonds, fixed income sort of yielding, let's say up to 6% per annum, and wouldn't it just be nice if that just arrived every month or every year, sort of in a straight line? I think a lot of investors would absolutely love that. It's a really nice return profile, isn't it? And unfortunately, that's not what happens, because those expectations of interest rates cause the actual prices to move as well. And I think you've seen that a lot this year, as the market has really grappled with what the sort of profile of rate cuts is going to look like and how long rates are going to stay high. And I think that's caused a lot of pain for fixed income investors. I'm sure lots of people in DC funds, including ours, who've seen a couple of tough years of performance at the start of the year, they might be thinking, great, I've got 6% yield coming. But it's actually been a lot more of a painful ride than that.
And you do see, Charlotte, lots of talk about financing mechanisms. Is there a magic pill? Is there an incredible solution out there, financing mechanism which will crowd in pension capital and other types of private capital to deliver these projects? And in my experience, the reality is that although financing mechanisms have to be adjusted depending on the type of project, risk profile, income streams, construction risk, etc., in reality, so much comes down to the amount of public finance available to persuade private capital to come to the table.
Even if we do our best, we're not going to make a difference, because China is emitting more than anybody else. Now, the second part of that is true. China is emitting any more than anybody else. But it's a bit like when you go to an oil and gas company, they're digging up the most oil, but if they are the places that make a biggest difference. So it actually means if China's now helping to reduce global emissions, every little bit that any one of us does, including pension schemes, is going to help. So it's no longer saying what we do is so small and it's so insignificant because outside pensions, we can't stop what China's doing. China's actually on side with the transition and is helping to solve it. So it gives us the impetus to do our little bit.
Yeah, I do. I love the FT. It's a great newspaper, but it's particularly good because the people that read the articles add half of the value and always a lot of the entertainment. And they've been having a field day on Thames Water. And, it's genuinely quite a grisly story because it goes back a hugely long way to privatisation in 1989. And, the notion that this was going to produce incredible efficiency and cost savings, and when we put it in the private sector, it's going to be so well managed. And it really hasn't worked out that way. And as someone that is a Thames Water bill payer, facing the prospects of up to 50% increase in service cost by 2030, it's not very pretty. Plus, there's the grisly business of sewage landing through the Thames Water area, and none of us like that.
Only in the last, if I look over the last 3 or 4 years, only about 9 gigawatts of power have come on, renewable power have come on. And really, if the government wants to hit its clean energy target by 2030, it needs to actually see 140 gigawatts of new alternative energy come on, which is a huge leap from where we are today, and giving themselves only 6 years. So, they're articulating, saying, look, we need to double the size of offshore wind, we need to triple the size of solar, we need to quadruple the size of offshore wind to get anywhere near those sorts of targets. So it makes perfect sense, I think, for asset owners to get together and say, look, we understand these targets, but if you are serious, you need to make some fairly significant policy initiatives in order to be able to make that happen.
And you said to me that this is one of the things you really liked about this report, that it's not just going, there's a problem, it's saying, here's the solution.
So we have a partnership with Octopus Energy, and they are pushing for us renewable energy programs across UK and Europe. And they invest, for example, in a company called Deep Green, which builds computer, basically sort of like servers, big server stations, I guess if that's the word, or server centers. And that generates heat. And then they're using that heat to provide free heating to the people who are prepared to host their servers. So there's a real green opportunity there, not wasting the heat being generated by the servers, but actually using it for heating purposes. So it's those sort of opportunities which are quasi infrastructure, which we definitely are interested in.
And many of those questions are on the side of favouring divestment as a strategy. Now, our approach at Border to Coast is one where we believe that engagement is the most effective means for encouraging behavioural change at companies. And so what we did was initiate an investigation into this, a piece of work into it, where we really wanted to see what was the evidence out there that supported one over the other. It's in a paper, it's on our website. In summary, though, what it found was the academic evidence was more in favour of engagement as a means to influence outcomes rather than divestments. Yeah, I think on top of that, though, it looked at what does effective engagement look like.
And sometimes you have to get your hands dirty and you have to go brown in order to go green. So could you talk to us about those lessons that have been learned and some specific examples of what the LGPS is investing in now that's going to bring around real world change than, say, for example, just virtue signalling?
So I'd say a lot of funds now are turning to their private markets assets that have probably been the more difficult places to do. So you're looking a lot more at property, whether it's commercial or residential, and trying to convert buildings to be greener to help manage down those costs. I think that's a big help rather than just investing in a fund which builds new green buildings. Instead, it's converting what we already have, which I think is better for the world. We've seen a lot of funds invest more in renewable energy infrastructure.